Hey guys, how are you? It's been a while since my last video, but I'm coming back to you with what I think is an interesting opportunity in the biotech space. So I'm going to be talking about Assertio Holdings, which is a microcap biotech stock trading in the Nasdaq. Usually it's trading around 60 to 70 million market cap. So it's not exactly a big cap safe company, but I think also the risk is higher, but the reward is higher, and I think the ratio it's quite good in this one. At least I like it. So let's discuss a little bit more about the company history now. Then we'll take a look at the product portfolio, historical revenue by product, the balance sheet, and then what are the future projections and potential upside on this opportunity. No. Um, so basically, Assertio was legacy specialty pharma. They had Indocin and Sympazan as the main products, but Indocin was recently already classified as well, the patent expired, so all the generic competition entered the space, and it's basically declining in revenue. So they decided to make an acquisition to basically bolster, since they had quite a lot of cash back then, to increase the product portfolio and have more assets with longer patent life that they can exploit and, well, basically keep the company alive, no? And basically what they did in 22 was acquire Spectrum Pharmaceuticals, which had Rolvedon as their main product, which it's a drug for neutropenia in cancer patients. I'll talk a little bit more about that, but basically it helps replenish white blood cells after going through a chemotherapy cycle. Um, and basically this opened also like oncology as a new market for them because none of their previous products were in oncology. Which, to be honest, I think usually it's not good because it's better to be focused on certain therapeutic areas. But yeah, they did this. Then 23 to 24th was a bit of a mess, to be honest. I don't know exactly what they were doing, but I think they lacked strategic direction. They had two different CEOs during this time frame. And they were also dealing with some lawsuits for some pay management products that they had before. They were trying to reduce costs, I think. They also talk a lot about M&A and acquiring new products, um, which I don't think it made a lot of sense, but this was their previous plan. They changed their mind, as you will see. And they also did some studies, which I think this was a good idea to push for Rolvedon adoption. Um, Probably the most interesting thing that can happen here is, we'll discuss this in the next slide, but that they get included in same dosing guidelines, um, which potentially could increase adoption. Um, and yeah, and basically I would say 23 and 24th was mostly losing time, and this was reflected in the share price. So share price super volatile, and they lost a lot basically. So the performance was really bad. And then I think in 20 this year, basically, things in 25, things started to get better. No, so they are pushing for more consolidation of operations under a certain specialty pharmaceutical brands, which I think makes sense because it probably will decrease costs. They are discontinuing some of the non-core products that they had, like Otrexup, and these products were adding revenue but were not super profitable. So I think it makes sense to divest. They are doing a good job, and they also changed their CEO. No, as I think this was 2 months or 3 months ago, before their Q3 earnings report. The previous CEO had a plan to acquire more assets and keep growing. But the new CEO that came in changed a bit. I think comes with a different mindset. His expertise. He's a previous board member. and his expertise it's in oncology. Um, and I think it should be actually quite useful to increase adoption and reimbursement of Robeldon, which is their core asset now. Um, he then made a lot of press disclosures, but I think given some minor disclosures and type of words that he's using, I don't think the plan is to acquire more assets anymore, and I hope so. Otherwise, my thesis goes to shit. And then the more recent development that pushed the stock price even lower, um, and which it's usually a very it's a huge red flag, especially for small biotech pharma stocks. But I don't think in this case it is, and this also created, I think, a bigger opportunity to buy at lower prices, no? But what happened is that they did a reverse stock split, 15 to 1, and this is basically to comply with Nasdaq, because they were trading for below $1 for most of the year, if not all. They received the first notice early this year. They had an extension on that, and I think basically they were at the end of the deadline that the, the SEC gave them, no, the SEC gave them to comply. So they had no really no other option than do a reverse split. Otherwise, they would get del get get delisted from the Nasdaq. No, but they did that actually a week ago, last week. And this is, for this is a automatic sell signal for many institutions. No, so the stock got pushed even lower. Usually because, and this is pointed out here. I'm gonna zoom in a little bit. Um, but basically, usually what happens is uh, reverse split. It's what happens before some of these companies raise more equity and dilute more even current shareholders, no? So it's something that happens afterwards, because then the price gets destroyed, and basically they go back to a similar price they had before, price per share. I don't think this is the case. I think hopefully this will not happen, and I think this will not happen for two reasons. One is insider ownership of the company has been good. I think no major sales of stock for the last 6+ months. The board didn't sell anything. Most of the most of the insiders didn't sell anything. Maybe some scheduled tax uh, purpose sell, but I think usually when this happens, the board unloads their shares, because they know the price is gonna get destroyed now if they raise more equity. And this didn't happen. Um, and then also, as I said, there was a change in the vocabulary that the CEO of the company, Mark, used, and I pasted here an extract of it. But you know, this was released when they did the the reverse stock split. Um, my feeling is that they are not gonna raise more equity. That the goal is not to acquire new assets. They don't really need the cash. They have a lot of cash. Actually, as you will see, most of the market cap it's cash. So if they don't need to acquire any new assets, they don't have any excuse to raise more equity. And this is in line with what the CEO said, no? So I think there's a bit of an overreaction here. But then for 26, these are my two scenarios basically, and we'll dive deeper into the good one in the next tabs, because I think the bad one is, if tomorrow they decide to raise more equity, well, the company is fucked basically. Or the insiders start selling substantially after a reverse split. I mean, it would also be a very bad signal. But I think there is a good opportunity here, no? I think if the mark focuses on growing adoption of Rolvedon and Sympazan, maximizing the life cycle of both, reducing cost as much as possible, doesn't do any M&A at all, Sorry for that. And then he also manages to get into the guidelines for same-day dosing for Robeldon, which will increase adoption even further. I think they're in a good position, no, if they do all of this, but we'll see. Anyways, let's look at the product portfolio because I think we talked too much already about the history of the company, and basically the product portfolio can be divided into three buckets. The two main assets, which are Rolvedon and Sympazan, and then the rest, which I classify as other, no? But let's take a look at Rolvedon first. No, Rolvedon, it's, as I said, it's a drug that's used for replenishing. Basically, it stimulates the creation of white blood cells after chemotherapy, because chemotherapy destroys everything, including your white blood cells. So you are exposed to any kind of infection after chemotherapy. So usually you do the cycle of chemotherapy, and then 24 hours, and this is an important point, at least 24 hours after the cycle of chemotherapy, you get one of these. They're called GSCF. I think are called colony stimulation factors. Granulocyte colony stimulation factors. Yeah. And there are many, right? I mean, it's a market that has a lot of generics. Neulasta, it's probably, I think, the biggest, has the biggest market share, and you can look that up. And then there are a few generics of Neulasta. Um, Neulasta is owned by Amgen, by the way. And then there are a few generics of Neulasta in the market, no? So it's not an easy market. It's dominated by generics. But Rolvedon, it's not a generic. It's another. It's similar, but it's patented, and it's, let's say, it's a different form of or different, yeah, version of colony stimulating factor, no? So it's protected by a patent. It's probably a bit more potent than what's in the market, and also this means that it has probably more chances of being accepted to be used as a same-day dosing instead of having to wait 24 hours, no? Because the current patient workflow is that you need to wait 24 hours, you need to go back to the hospital to get the injection of Neulasta or Rolvedon or whatever. But if you could give this injection just after chemotherapy, so the patient doesn't need to go back to the hospital, probably this would make the life easier for the patient, and also um, be more convenient for the hospital. I don't know what are the fee per service incentives there, but probably this would drive adoption, no? And reduce costs overall. And this is one of the main bets for increased adoption. Right now, adoption of Rolvedon is very small, so the total market share it's quite low. But I think that's part of the opportunity too, no? And as I said, the pricing is similar, so there is not much of a difference there. Um, and also, it's not, as I said, it's not the first line of treatment for many cases. They have a huge um, market share in Medicare Part B, mainly in outpatient clinics, and I think in those cases probably it's first line of treatment, but in most cases it's not. So as a doctor, you need to justify that Neulasta or one of their biosimilars didn't work probably before using Rolvedon. No, again that can be changed, and I think that's part of the opportunity. But right now, its adoption it's quite limited because the total market it's probably 2 to 3 billion in size, and they are doing about 60 million sales annually, no? So you can get an idea of what's the market share there. Um, and then patent life, it's of Rolvedon, it's alive until late, almost to 2040. Then Sympazan, it's much smaller market size, so it's basically it's a new way of delivering a drug that it's already generic for LGS syndrome, which is a rare disease, affects 48,000 patients in the US. Current formulations for generics are available as oral tablets, oral suspension, and so on. But Sympazan is a new form of delivery of the generic, already generic molecule that it's I don't know what's the name in English, but basically it's one of these papers that you put in your tongue and dissolves. Um, and because usually these patients have difficulty swallowing, this is probably, it helps. It's more convenient for patients, but again, it's not a huge differentiator versus what's currently in the market, no? Um, it's covered by both Medicare and Medicaid. Um, and given what their quarterly sales, the number of packages and the price per package, we would assume they are treating around 700 patients per month are receiving Sympazan. That's a very rough approximation. And the total number of patients, in the US, it's 48,000. So you can see what's the market share there. It's also very small, but I think it's not easy to grow adoption here. But probably it's I think it's should be profitable still to sell to these patients and slowly increase market share or maintain it. And the patent life it's similar to Rolvedon, so it's until the end of 2030, almost 2040, no? And then we have the other, no? So Indocin was one of their main assets back in the day, but now it's gone generic. So as you'll see, revenues for this product are declining substantially year over year. Otrexup was another Trexup was another of their products, but they discontinued the production of this past September, probably to increase profitability. And then we still have a few other products that are basically, I think more or less we'll see it, but bringing around 3 million per quarter, so around 12 million per year in revenues. Um, and that's it. I think this is a good summary of all the products. Feel free to stop at any of these points and look in more detail at all the bullet points for each product. Let's look at the revenue. No? So this is historical. Again, very rough. This, probably I could have done a better job splitting 24th backwards, but um, we really don't need it for this analysis. No? So basically we have annual revenues for Rolvedon, Indocin, and also all the quarterly revenues um, for 25, no? And as you will see, I mean, we still don't have the data for Q4 25, but I did an approximation based on the full year guidance and previous historical data. And because the full year guidance they gave in the last quarter was quite narrow, I think it's a good approximation. So they guided for 110 million in sales for the full year and around 15 million in adjusted EBITDA. And my projection, more or less rolling forward, some of these give me 104 million, basically by trying to guess what would be the revenues for each product in the last quarter. And you will see that the 6 million difference we will see more or less where it's coming from, but this would be quite accurate, no? And then and as I said, and as you can see, the uh, main revenue drivers are Rolvedon and Sympazan. Indocin is still substantial, but again, it's decreasing a lot. So it was 27 million in 24th. I think this year maybe it falls around 18 million probably. So yeah, and next year probably will have another substantial decrease. So it will become less and less relevant. Then, as you can see, we had a big decrease in Q3 in the others bucket, and this is mainly because of Otrexup discontinuation. So we decrease revenue here, but probably increase profitability. And then, as you will see here, and as you can see here, I also had to make a small adjustment for Rolvedon revenues. No, so these are not the real revenues reported in Q3, and this adjustment also probably will be different. No, and here you more or less can see why. No, it's basically because as I said, one of their ongoing efforts is to consolidate everything under the Assertio Pharmaceuticals brand, and Rolvedon was still being sold under the Spectrum Pharmaceutical brand. No? So they need to do a change in packaging and labeling, and to do that, they need to avoid any interruption in supply for patients. So basically, they front-loaded uh, all the sales for Rolvedon in Q3, Q4, and Q1 2026. So 3 quarters of sales they front-loaded in the third quarter of this year. So basically what I'm saying is that they recorded all the sales for these 3 quarters in Q3. And basically, if you look at the Q3 earnings report, you'll see that the Rolvedon revenue it's almost 38.6 million, so almost 39 million, which roughly it's equivalent to 30 million per quarter, or 12.9 to be exact. And this is what I'm doing now. So I didn't want to. I want to smooth the projection. So basically, what will happen is that revenues for Rolvedon in Q4 and Q1 of next year will be zero, no? Because we recorded 39. But instead of doing that, I just divided the amount by 3 and assume around 30 million in Rolvedon revenue for this quarter, next quarter, and Q1 next year. Just to be to smooth it a little bit, and it's easier to understand, I think, this way. And the difference I was talking about between our projection and what their guidance for the full year is basically that I assumed an equal split through all the quarters for Rolvedon, but probably they allocated a bigger part of the revenues to this year versus Q1 next year, no? So instead of 13 and 13, maybe it was 15 and 15, and then a very small part, like 9 million in Q1, yes, around 9 million for Q1 next year. Then probably, I don't know if they expect higher Indocin sales or Sympazan sales in Q4, or other sales for the rest of the products, but I think most of the difference comes from that, no? And then another thing that I think it's worth noting is that, as you can see, Rolvedon revenues have more or less stagnant. So Q3, Q3, sorry, 2023 was 57 million, 2024 60 million, and then for this year again, this is probably it's higher because the way I did the allocation, but we could assume 60 million probably for full year 2025, which is basically the same as last year. So in reality, sales are not growing. I mean, there is a factor here that probably they offer discounts to distributors to front load all of this inventory. So even though in terms of sales, it's been the same as last year, maybe in terms of volume, it's been higher this year, and they just sold it as at a lower amount because they had to front load everything, as I said. But still, sales are quite stagnant for Rolvedon, which is not necessarily a red flag, but it's something that to be taken into account. And I think that's it. So this is more or less historically, what each product brought to the table. Let's look at the balance sheet, which I think it's when it starts to get interesting, no? So in the balance sheet, right now, and all stock price data, it's as 29th of December, which is when I'm recording this video. And then debt, cash, and anything they need to get from the earnings report, it's as of Q3 this year, no? So current shares outstanding after the reverse split around 6.4 million. Price share today was more or less $9.94 per share. So it gives a market cap of 64 million. And then the total debt that they have a convertible note of around 40 million. It's this, no? So if we add both together, market cap and debt, it's 104 million. Then if we look at cash, so as of Q3, they had 38.5 million in cash, and then 55 million in short-term investments, so cash equivalents basically. And if we add both of these, we have 94, no? 94 million. If we look at this on a per share basis, so cash it's 15, and then if we add both cash and short-term investments, we get 8.3, no? So basically, we're only paying for this difference, no? The difference between 8.3 and 9.94, which is the enterprise value, which is basically adding market cap plus debt minus cash and short-term investments or cash equivalents, no? So basically, the enterprise value currently it's 10 million or 1.6 per share, no? So when you're buying the shares of this company, you're actually paying as if the company you're paying 10 million for pro rata for the company, let's say, for each share that you buy. So it's quite low, no? Like 10 million is a very low threshold. And the question here is, can this company be profitable? How much cash they can generate in the future, no? Because given the amount of sales that they are doing and how low its enterprise value, well, we can start to see that there might be an interesting opportunity here, no? So let's look at future projections, no? And here, what I've done is I've taken the historical that we've seen in revenue per product, made some assumptions to forecast future revenue, and then I added another lines for cost, no? And basically, we have historical data for the cost of revenue, SG&A, and R&D of the company. I'm excluding amortization and any other non-cash expenses, so we are only focused on EBITDA, no? Which is earnings before income, depreciation. Sorry, before taxes, depreciation, and amortization. I'm sorry for that. I got back down. So yeah, revenue assumptions. And here, we're talking about, well, I think it's a conservative case for revenue because we're assuming Robidon revenue is constant, so not increased adoption, but they're able to maintain market share. There is no inclusion in the guidelines for same-day dosing, which would probably increase adoption. For Sympazan, I'm doing the same, so assuming revenue is constant. For Indocin, I'm actually being, I think, quite conservative, and I'm assuming it keeps decreasing at the same rate as it did for 24, 25. So we can see that probably it will decrease by a 30% full year 24 to 25. So from 27 million revenue to 18 million revenue in 25 for Indocin. So I'm assuming 30% decline for 26, which it brings it down to 12 million, then 8, 30% additional, 30%, 6, 4, and so on. No? So I'm assuming Indocin revenues go down quite fast, which I think it's conservative. I think in reality, as we get lower amounts, this will become, the year-over-year decreases will decrease. Let's say, no. So we'll have kind of a slope that smooths over time. And then for the others bucket, I assumed constant revenue going forward, which I think it's okay. It's not. I haven't looked at the patent life for these minor assets. I think it's okay to assume constant revenue. Maybe they divest some of these assets and get, basically any future revenue for push any future cash streams forward. But yeah, I think it's a fair analysis, no? So we get 107 million again for 25, and this is a bit lower than the projections because of the allocation issue that I mentioned, but it's not going to make a difference. Then I 96 million, 92, 90. So your total revenue keeps decreasing until 35. In reality, this could go on until 2040 because patent life for the two core assets, get there. But yeah, I'm only forecasting until around 10 years until 2035. Robeldon revenue stays stays constant. Sorry for that. Then Sympazan also constant at 11 per year, and Indocin, as I said, 30% year-over-year decreases, and others constant. Then for cost assumptions, I assume they're able to maintain a gross margin of 70% going forward, and this I hard coded this into these two months, and then also in any future years. And I think this is a bit optimistic because I think that as Indosin, I think Indosin is the highest margin product that they have. Probably some of the revenues in the others bucket, I think it's royalties or something like that. So as Indosin and others decrease as a percentage of total sales, and we have more Rolvedon and Sympazan percentage of sales, I think gross margin is going to decrease. I don't know by how much, but I assumed, yeah, it stays constant at 70%. Hopefully it does. Then SG&A around 60% of revenues, and this seems optimistic, but we'll see that it's not that optimistic because you'll see that the percentages for this year are higher, no? But we'll see. And then R&D stays at 1% of revenues. I think this is sensible. I don't think they need to spend anything on R&D unless it's like some studies to support higher adoption of Rolvedon or Sympazan. But that probably should not be super expensive, no? So some key adjustments, no? So as I said, I adjusted the revenue for Rolvedon here to 60 million higher. Sorry, 60 million in total. I did some adjustments to the cost of sales also, as I said here, to the gross margin, because in the end what happened is that they also recognized the cost of sales for 3/4 of Rolvedon in Q3, which is, if I'm not using the full revenue of Rolvedon in Q3 and I'm dividing it by 3 for each quarter, then I should do something similar for the cost of sales, right? But then you also have the cost of sales of the other products mixed in there, and it's very hard to separate one from the other. So I assume 30%, which is more or less, you know, they in Q3 they gave a guidance of 72% gross margin for this year, and I hope, you know, maybe it decreases a little bit, so I put 2% buffer there, and I assumed it's 70% going forward. And then the interesting thing, no, is that when we look at the company with the current SG&A costs, it's not it's not making money, no. So we are losing money for the full 2025 year, no, and this is weird, no, because they gave a guidance of 15 adjusted EBITDA revenue for this year. We need to take into account that that also is considering the probably the revenue that they will get from Rolvedon in Q1 next year, but let's ignore that for now. No, the question is why is the difference so big? Because they have a lot of non-cash expenses. I'm not talking about amortization and depreciation, but also other things that they recorded in SG&A for this year, and will probably will not repeat next year, no, because these are one-time things, and hopefully they will be one time, but I think this is correct, no. So they incurred 3.5 million in legal settlements from SG&A. They also incurred 9.3 million in basically in divesting Assertio Therapeutics. I think it is just that they moved from one what's the name in English, legal company to another, from therapeutics to holdings, and this is related to the lawsuits from the pain management. So they left the old structure there with all the lawsuits and moved to a new structure, and basically they incurred one-time expense of 9.3 million, and then also they incurred 2.6 million in SG&A cost for because of the discontinuation of production of Otrexap and some, you know, current agreements that they had to deal with in there. So basically, when we add everything here, we get $16 million. No, so the real SG&A expense for this year is actually 15 million lower than the 73 million that we are seeing, more or less. And you can look at this in their Q3 report. Here we have an extract of all the items. I didn't add back stock-based compensation because I think, to be honest, that should be there because it's dilution. And then some other items that I did not subtract, but more or less balance out between each other, I think. In any case, the idea here is that we are not talking about 68% of revenue for SG&A, but the amount it's lower, no? And what I did is I calculated what's the real percentage, and this is 54%, and applied this as a percentage of revenue going forward, no? So I assume that SG&A going forward, since we will not have all these one-time payments that we had in 2025, will be 54%. Then we have the 1% already discussed for R&D and the 30% for the gross margin, no, and the cost of sales, cost of revenue, the same. So now if we take a look at all the EBITDA that we will generate in the next 10 years, we can see it's around 132 million, which is, I think it's significant. And taking into account that we assume no growth in any of the core assets, I think this is more or less conservative. So if we discount all these future cash flows, because at this point these are basically cash flows, at a 10% discount rate, we get that the current value of all future cash streams, it's around 83 million, no? If we if we assume that and this is an approximation also, but the number of shares stays constant throughout this period, more or less we have $13 per share as a current value of all future cash streams, no? And we already discussed that the current enterprise value per share is 8.3, no? So if we add both of them, we get that the current stock price, let's say if we assume all these future cash projections, should be around $21, no? And taking into account that the current value is 9.9, we basically have an upside of more than 100% on the current stock price. And again, I think this is a quite conservative scenario, no? If we assume even a 5% year-over-year growth in Sympazan and Rolvedon, the upside it's more than 200%. So overall, I think this is an interesting opportunity. I think we'll need a catalyst to realize this, because I don't think they will give buybacks or dividends or whatever. But overall, I think if they don't mess up and do anything stupid, it seems like a good opportunity. And I hope that the new CEO does a good job with Rolvedon. I think the current standard of care, like it's very bad. So anything that can be, well, I don't think it's very bad. Maybe that's not the right word. It's not super convenient. Like you need to go back after chemotherapy. Like these medications cause a lot of bone pain. So yeah, I think maybe Rolvedon can help make some of the process more convenient. But let's see. And this is it. I think this was interesting. Probably this was longer than expected. And yeah, one last thing. Obviously, I assumed EBITDA is cash flows, but if this needs to be returned to shareholders, you also need to pay tax, no? So you will need to apply the tax rate on top of this. But yeah, I ignore that. And then we also have the interest on the current debt. But also we have all the cash, all the interest that we get on the current cash. So the difference, I don't think it's huge, and I think all the debt converts next year. Next year or no, on 2027. So still it's not gonna hugely change the forecast, I think. And I think that's it. Any questions, comment, just put it below in the video. Um, Looking forward to know your thoughts, and yeah, thank you for your time.